folks, Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory. Thought we'd come to you today with a brief market update, kind of let you know what's going on out there. Obviously a very turbulent time in the markets right now, really kicked off by that jobs report that we got late last week. The S&P 500 down about 2.25% as I speak right now, down to about 52.25. Which is following kind of that sell-off on Friday, late last week. So equity's really taking a little bit of a pause. I like to look back over a little bit longer time frames when we talk about equity market performance. We're down about 4.7% over a one-week trading period for U.S. large caps, that S&P 500 that we reference so frequently, and still up about 10% for the year. So as an advisor reached out to me today and said, hey, we're really just back to the levels that we were at about 3 months ago. And that is very much the case. The S&P giving back, but certainly still a very positive year for those large cap stocks. I do think it's important to kind of run through the headlines a little bit on some of the other asset classes that are out there, because I think it'll help understand a little bit what's going on in the marketplace. So, for example, common narrative, these AI massive tech companies are having problems with their earnings, etc. When you actually look at market performance, the Qs, which is the NASDAQ 100, is actually outperforming the Dow or the S&P 500 or the NASDAQ. It's probably one of the best performing asset classes or broad index that's out there. Meanwhile, you have the NASDAQ as the worst performer. So if the NASDAQ 100 is one of the best and the NASDAQ itself is one of the worst, that actually means that small cap tech is where a lot of this sort of carnage is, those small cap growth stocks. The Russell 2000 certainly taking a beating, that small and mid cap land, that is down about 8% over the past week. And that's really, if you start to sift through the narrative that's out there, it really is on these smaller cap companies where people are worried about the economy. Those companies tend to be a little bit more economically sensitive. And that's really where a lot of the carnage has been. And I would also just note that some of the places that you might think would be great places to quote unquote run and hide during times like this aren't actually holding up. International also down a comparable amount to U.S. large caps. So the ACWI US, which is a measure of all international stocks outside of the United States, still down about that 4.7% that the S&P 500 is down. And I just mentioned this in passing, Bitcoin's down about 16% over the past 5 days. So not really acting as that hedge that anybody might have thought it might. On top of all of that, I would say that your traditional safe asset class, those boring old long duration bonds, are up about 1.7% over the course of the past week, which is doing exactly what we want them to do in a balanced portfolio. The Barclays Ag really showing why the 60-40 or a 50-50 or an 80-20 makes a lot of sense. Those asset classes really outperforming in periods of times when equities are selling off, and in periods of times where we're worried about some type of job market slowdown or economic slowdown. So all of that is working exactly like it should. Playbook for advisors like ourselves is very similar to what it's always been, which is when we start to get into these situations, we start to look for opportunities to tax loss harvest, or maybe trim out of positions that have sold off and use that trimming for tax efficiency. And also just keep an eye on the balances within our portfolio, as we always do. And I would just note for people, like, now is one of the most dangerous times in the market, not because of what's going on in your portfolio, but more because now is the time that people are most prone to make mistakes in terms of trading, in terms of asset allocation. And so we just really encourage people, this is exactly the reason why our portfolios are sort of constructed the way they are. And so, we really encourage you to sort of stay the course. And if you have any questions, if you're concerned or anything else like that, please, 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 as always, feel free to reach out to myself or to your advisor. We will obviously be coming to you more frequently in these periods of volatile times. So until I talk to you again, I hope you're having a great day, and I look forward to talking to you again soon.